Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market as usual. So, yesterday on the background of the Fed statement, you could see that gold also has started some tactical pullback. In general, we have discussed this, the reasons for that from the technical point of view. It's also good background for the minor pullback. It's just because of the combination of the technical factors. As we said, we have the bullish stretch patterns, marketers overextended right in the major support area. Some intraday OP targets also has been completed, so theoretical background exists for upward reaction. But now the question is how strong this reaction will be. Currently, it seems that it hardly will be too extended. And this is absolutely normal and understandable situation. Why? Because if you'll take a look at the statement from the Fed, you will see that despite the rate has been changed only for 25 points, Fed has changed significantly the analysis of the nearest term in the view on the economy. So gross domestic product forecast has been cut for the 30%. So it was initially 4%. Now Fed expects 2.8%. The term of the rate change cycle has been extended on the 2024 year, and now the terminal rate stands not around the 2.25 points, but even higher, 2.4, 2.8%. This tells that Fed increases the inflationary expectations in the United States economy. And for the gold, here I think that gold, once the big events currently stands in the past right now, so you can see that the Russian military operation is turning to some routine event, some hard response from the North Atlantic Organization hasn't followed, and currently it becomes not as important in the minds of the investors as these big events already has happened. And they're turning eyes back to the financial background, to looking on the financial situation, financial problems in the United States. And here, the gold still need time to find the ground. It's just because despite that inflationary expectations have increased by the Fed, we have mostly supportive background for the gold. Why? Just because for the inflation around 12%, I mean month on month, based on the recent statement of the CPI numbers, or 8% on the yearly basis, the performance of the United States economy will be around 2.5, maybe 3% at the best. It means that here is a big negative return of the whole United States economy, approximately for 5% in a year. Which means that if even rates will start rising, the performance of the economy still will be negative. And that is, in general, in the longer term, good background for the gold market. And this should support market from the big collapse. That's what we think currently on the situation. Once market will find some fair price, will find some ground to absorb the recent information, investors need some time to sleep with this new data that we've got. The performance will keep going, and very probable that some bullish action on the gold market still could happen. So we're not really pessimistic on the gold performance, but we still think that market could spend some time in the consolidation before it will choose the direction and set the pace of the action and how it will go. So because overall situation mostly supportive for the gold, because our suggestion that Fed always will be a few steps behind the real inflation, and as far as will go with the rate rising, the more and heavier negative impact will be on the United States economy. And we suggest that it's really high degree of the probability when the Fed will push rate relatively high that will start making negative impact, while inflation still will be high. And they will not have enough tools to control it. And this might become a very big moment for the gold market, and demand at this point might increase significantly. But this probably will happen close to the end of the year, not earlier. Besides, we do not see yet the negative impact of the commodities rally. in the United States economy, because the data is not showing it yet. So we will get the first number maybe in May, June, I suppose, not earlier. So despite that, this recent drop and flat action here, it's not time to think yet that gold market is doomed and its rate starts to rise, it should drop. Not necessary. So in the short-term performance, we see that reaction in general stands very small and weak, and that is understandable. It mostly was the maybe some sentiment, some psychological reactions, closing of some short positions, as investors haven't got the change for a 50% rate change. And in general, here we have background only for scalp trading. So if you would like to trade gold on the long side of the market, you could try to do this, but you should understand that it's very short-term setup, and it might be over very soon. Yes, we have here a nice bullish reversal. You could use it as the invalidation point for a short-term scenario. Try and take position on some retracement where there's some upper continuation. But this will be very small, as I said, scale for trading. In particular, speaking on the hourly chart, we've got the butterfly. Here's the rally. For instance, if you will get the grabber here on the hourly chart, here we have the divergence, by the way. If we will get the grabber right at some support, for example, it might be 1921 area, well, you could think about taking the position with the nearest targets around 1940 and 1953. So these two targets probably might be hit. Maybe later market also will start forming some ABCD. You could estimate the target with more precision. But as you understand, this is tactical short-term scalp trade. It has no relation to the fundamentals and some more important information on the gold market. So, but gold, as I said, needs some time to find the ground and set the strategy, actually. So investors need to understand what's going on and how to behave in the nearest time. So that's what we have currently on the gold. Let's see what will happen.